Good day, traders. Today we want to show something very new, and we are going to open the doors for members or non-members to have this opportunity and get that system. This is what you're looking at is the Best Pro Trade Zone, and it's based on fibs, retracement, entry point, and reversal. Entry point, and it is really, the accuracy is beyond your imagination. We are going to show on the 1 minute, and the reason we are showing on the 1 minute, the system can be used on Renko. We will show the Renko, we will show the range, we will show the takes, but the reason I want to use the 1 minute for one reason only. Any auto trade or any indicator, you really want to magnify that system to see the accuracy in it. You will never get an accuracy on a Renko bar because the Renko bars move. Whether you are on an auto trade-in or an indicator, that will not reveal any accuracy on any system, whether it's an indicator or an auto trade, not unless you can test it on a 1 minute. And that's why we do not anymore use Renko bars on any of our auto trades. If you have an auto trade, you need to test it on 1 minute. If it cannot succeed on 1 minute, you need to move on to the next auto trade because you will never make it in this business. A lot of times you see an indicator based on a 15, 20 minutes, 60 minutes, but the question is, what is my stop loss on 30 minutes? What is my stop loss on 15 minutes? Is it 80 takes? Is it 100 takes? I can throw a couple lines on a 15 minutes and make it look like a rebust, make it look like a money-making machine. And sadly, new traders, they don't comprehend that sometimes, or they don't pay attention that the time frame, any product you're looking at it, if it's not in 1 minute, ask for the 1 minute. Auto trade, indicator, 15 minutes will hide any false in the system. Renko bar will hide any false in the system. If the 1 minute can show accuracy, that's mean whether it's an indicator or an auto trade, that's mean you can use that system on anything you like, whether it's 2 minutes, 3 minutes, range bar, Renko bar, then you can move on. But you do not start with a wrong time frame or a wrong anyway, we don't want to sit down and teach about trading. This is the NASDAQ 1 minute, and we will be showing the Forex. We will show the stocks. The most important things also, there is no indicator out there. Will show you when the market is going to go sideways or is going to be flat. But you can predict that immediately when the systems start getting in the channels, that you have to wait on your trade until we see some major breakout. So this is a very, very accurate system. And let's look at some other charts. This is the NASDAQ 1 minute. This is the ES 1 minute, and this is, we just had one trader nailed that one here, and this has come into the major support line, and you can see where it was the entry, exit, fell, and then it came in exactly to the 75. And by the way, the 75 level, we've been taking some trades all week long and cashing in around 75 and 73.50. This week with the magic number was the 75.50 and the 70 350. We cash in a lot on the ES on the 1 minute. Now, just for demonstration here, I want to show the Renko bar. And as you see, when we were looking at the 1 minute, you can see the truly trend and on that ES. And now for the Renko bars, here's your reversal. I mean, here is your entry, but I don't want to waste time on a Renko bar. But here the system is on a Renko bar. Pullback, re-enter is always, I've been doing this since 1988. The most success trading is identify your trend, wait on the pullback, and re-enter. And all the rest of the banana trading out there, I'm not related to. Drawing lines, nope. Traders, when they are going live, they don't see it. And here is the 150 ticks for every trader on the ticks. He has a magic number. Some of them use 90 on the ES, or 244 fib numbers, or 288s, or 300. But we're going to use, today, we're going to show the 150. You can see exactly came into the same line from the 1 minute on the 150 ticks, which is 75.50. And you can see now the consolidation in the market, and you can see there is nothing right now we can take. And then you have a major resistance here, so it's not even worth to take that trade for just a couple ticks. Anyway, this is the ES 300 ticks. Also look at it, it's the same number. No matter what you use, you will have the precision, and this is what you can take advantage of it when you are using the 1 minute to 10-15 minutes with an 80 tick stop loss. When you are using the 1 minute, it's a matter of question if this market is going to hold on those position or not. Where that limited your stop loss stand using, I hear some traders, they say they use 20 ticks as a standard, or for every trade there is a price, and there is a stop loss, and there is a target. There is nothing called fixed. I don't know who came out with that, because when you are taking that trade from here, you only need few ticks, only 5 ticks. You just wait on the bar to close to the upper side, and then you hide behind the wall. Where if you are waiting on a pullback, then you wait till the market come back on that line, any line, and then you just take a small trade so you can survive the whole month, the whole day, stand going ahead and using $150 or $300, 150 on every trade. And then if you nailed it wrong, then another 150. That can be painful. But when your stop loss are very limited, because the accuracy telling you when you're going to be entering, that is a matter of question, is this market going to make it or break it? This is the only thing. And today we will also look at the ES at the 7 range. For the range lovers, here is your range, and you can see where most likely the ES is going to get in trouble, and where you need to trade it on the breakout, not when the market gets stuck in those channels. You will not trade when those market gets in those channels. This is the 7 range. Let's look on another one. This is the ES 4 range. It's the same story. You can see where the market came into major support, a lot of major support lines, and then followed by a reversal, entry point, exit point, and that is giving you a lot of advantage how to pinpoint your entry, because there is a lot of traders, they're either late or early on that trade with a very limited, they're not given that market enough room. Reversal on the DAX or entry, this is a lot of banana on that trade, and 7185, you could have get out of that trade 69. This is a lot of ticks on that. Pulling back, entry on the pullback with a major support, another pullback, pullback, reversal, entry, double reversal, entry, fell, and this one here. But of course, if you want to trade the DAX, it has to be doing the hours of the DAX to get. This is the DAX based on 1 minute. I personally use the 1 minute on the DAX, and I use the 3 minutes, and they have to be in sequence with each other. And then I look at the 15 minutes chart, and then I use a Renko bar for reversal and reversal only, and I use the 1 minute and the 3 minutes. Once they are in the same direction, on the pullback, we identify the trend, and you cannot go wrong with that trade. Stand trying to go in a circle. This is the YM, 1 minute, beyond your imagination. Come in here to the resistance, followed by a reversal, come into this area, and then a reversal to the take, and now it's nothing because it's Friday today, and on the last couple of 3 hours you're not gonna get any. That's why it is right now the time 1:47 p.m. 12 August, Friday, and practically all the traders are done for today. Let's look at the 30-year Treasury bond. This is a 1 minute, and lately I've been very impressed with the scalpers on the 30-year Treasury bond. They are even more stable than the ES, and it is amazingly, you know, it's like I'm going around and around the 30-year Treasury bond, and it is also the Nasdaq. Lately they are very impressive, the 30-year Treasury bond and the Nasdaq. For 30-year Treasury bonds, they're doing wonderfully on the scalpers. It's like almost every day they're getting the 100 ticks. But for manual traders, I find the Nasdaq lately a very stable market. I don't know. Anyway, this is the 30-year Treasury bond, and the CL 1 minute, typical CL. Look at this. And then you have a breakout, and it is today, Friday. Of course, there is nothing left today. Let's look at Forex. This is the euro dollar, which I love the euro dollar. On the Forex, usually traders use a little bit higher time frame, 5 minutes, 3 minutes, 15 minutes. Some of them look at 240 minutes. I'm not a day trader on the euro dollar, but and I only trade the euro dollar. That's the only currency I can comprehend and I can be related to. When I hold positions on the euro dollars, I don't just sell in and out every day. No, I just hold position, and I usually look at the 1 minute for the entry, and then I look at the 3 minutes, then I look at the 240 minutes, and I look at the daily chart to get pretty much a picture where we are in the direction, and then I can magnify my entry on the 1 minute, and that way not over merging yourself and holding the position for sometimes I got stuck with it a couple of weeks, and sometimes I was in and out within 2-3 days. But it is beautiful, the Forex, if you look at the bigger picture and hold on to those positions. And if the market went against you, if we say we entered in those line here, and then we can look where is the next line, and then we can enter one more position in this area here, then you will not be killed if the market went against you. And this pattern here, if you take a small position in this area here, Whereas it's a typical perfect entry, pull back, re-enter right on the line, pull back, re-enter, double entry showing, and it tells you where most likely that market is going to be exited anyway. But let's say if the market on the forex stand going and putting all your eggs in one basket, you can take a small trade on one position and you try to swing trade in the forex. That will be, it is lovely to trade as long as you don't kill yourself with being aggressive, and try to prepare yourself to see where is the next line, where is the next defense line. Is the probability this market may be gonna come if the market went against you in those area here? Most likely this is going to be somewhere, or you have a major double resistance on 1250. For the forex lover, just mark this number and you will see what will happen next week. However, that is if you take one position here and the market went against you, and you take one small position here, then you level out somewhere around that area and you can always get out of that trade. And this is in 2016. It's no longer you can make a bet on the bar if it's gonna close to the left side, to the up or to the downside. Those days are overdue. And for the ones that want to keep making a bet on that, it's a matter of time. They will be out of that game. It's a matter of time. This is the British US dollar, and we can see how, where is the entry, pullback, re-entry, always pullback, re-entry, folks. It's been with me since 1988. And I have read so many books back then, and none of the books work, and nothing was stayed in my head when you go live. And you cannot copy anybody's trade. Simply cannot copy anybody's trade. Because when we are looking at that market, one trader say is this market is about to break down to the downside. Another guy is gonna say this is a very good position and we have a breakout and I will enter long on this area, and some traders they're gonna say is sideways. The thing is, it's not one is smarter than the other. There is one is how his brain is connected to the chart, and this is the worst kind. Is sometimes traders, and I'm one of them, sometimes you take a trade, and this has all happened to us. After you take that trade and you can see that trade is not going to your favor, and you say, what the hell is going on? I mean, and then you start looking at this chart, you say, how come I didn't see this? How come I didn't see that? And you immediately, after 30 seconds, you notice that you are in trouble, and now you're trying to get out of that trade. We all have experienced that. The thing is how to get out of that trade without being suffered a lot. And that's why with the forex, if you're taking a small trades and let it be a winning small trade than to be a big winning trade. And if the market goes against you for some reason, I never can go more than one contract on any market. It doesn't matter if you have $1,000 in your account or $1 million in the account. The problem is when you are taking one trade, you are not emotionally connected with it. Let's say if you are taking the DAX, you're taking 10 contracts on the DAX. Yes, if you get it right, you're gonna be closing. We have some traders that can close 10,000 euro a day. But if the things go south, are you ready to lose 10,000 euro a day? And that is the key question. It's not how much you can make, how much your stomach can stomach bad day or a bad losses. And there is no such a thing called holy grail. I hear that word a lot. The only holy grail is in the trader. It's not in the indicator. It's in the management. And the worst kind of traders, when they cannot distance their motions from that trade because they are on a very low budget and they are overbuying in the market, and they are squeezed that one bad trade can hurt their account. And any guy has been trading, even if it's been trading for 20 years or 30 years, in order for you to go to heaven, you have to stop in hell a few times. And even when you go to heaven, you go back to hell for a few days sometimes. And couple of 3 weeks ago, we had one guy calling, and he's looking for an auto trade, does not lose any trade. I said, keep looking. Maybe not in this lifetime. There is nothing in this trading industry is 100% winners. Not today, and not tomorrow, and not in my lifetime anyway. So this is the British pound and the euro dollar, and you can see where was the support line, you can see where is the entry, you can see where the reversal. Let's look at the Aussie dollar. This is the same story. This is where the market came. You can see where is the volatility, and then we had the entry breakout. If you notice, pullback, entry, pullback, entry. Some of them, they're going to be small fish. Some of them, they're going to be big fish. Welcome to trading. When on the pullback, always you can enter that market in conjunction with your lines and with a minimum stop loss. Sometimes it goes to your favor, sometimes shoot, or sometimes you will get a small trade. Another thing traders they do, they use an auto trail, which I'm very much against the auto trail. The reason is I'm against the auto trail because on those conditions you're gonna be taking maybe 1 pip, 2 pips, 3 pips, 5 pips, I don't know. But once this market goes to your favor, and I find out they use a lot of auto trailing, and they drag about it. I mean, they're really proud of it, and I don't see what to be proud of, and I don't get it why you are in a hurry to get out of a trade. It's working on your direction, but when a trade is not going your direction, usually what they do, they give it more stop loss, maybe hoping that this market gonna turn back to their favor, which they do that the opposite. Anytime you use an auto trail, that is a matter of question, because this market is going up and down all the time, and it's a matter of a little pullback, and it's gonna knock you out of that trade. And in those positions here, like this one here as an example, it can be ES, NASDAQ, Dow Jones, whatever. When you have something like this, you gotta bite it, and you gotta take the crumbs off the table, because you are right on that trade, and you need to be rewarded, and you need to be getting paid for that. So the things is, when you are trading as an example and the market going to your favor, you always have to protect your stop loss or your trailing stop behind the wall, and then give it room for this market to go back and forth. Then I'll take it when I keep jumping from one line to another. If you, I mean, you're not, there is no entry here. I'm not gonna say there is an entry there. But let's say if this market going down that direction, and I have an entry here as an example, and now this market is somewhere around that area, immediately I will take a cover behind the line. I do not use an auto trail, and if you nailed it on the breakout somewhere here and the market pulled back, exactly that will indicate that this market, it could be dropping, and the market went down and pulled back, and it is a heavy resistance based on the 1 minute, and then a give out. So by hiding your trailing stop could be the trade for today. And this is the worst part. I noticed that when you are auto trailing, you get out, and 2 minutes later that trader want to go back in, and this time it's going to blow in his face, because you do not, and I don't know who said that, but you do not take a trade middle of the trend. The possibility of losing that trade is 90%. because most of the traders, they can identify the trend. They have all kind of whatnots. They have 20, 30 indicators. You hardly can see the chart because they want to identify the trend. Fine, they identify the trend. But how many times this market go back, knock you out of that trade, and a drop in 100 ticks or 20 pips or 30 pips? And trading is an art, passion. Let's look at Microsoft. Okay, Microsoft. Jesus, I haven't seen the Microsoft in a long time. If you notice right now how this Microsoft, and this is an area as an example, could be applied to ES, CL, and Forex. Once this, like you see now, the Microsoft is stuck in that channel. It's useless. And sadly also, the auto traders, they don't understand sometimes that when the market gets stuck in a channel, whether you are a manual trader or you are an auto trader, you're not going to be making money, because now you are in a turbulence, and that market is, there is no direction. And when you see so many lines and the market gets stuck in those channels, then you need to find alternative chart, different market, because you will be, most likely you will be having a really bad day. I'm trying to put it in a nice way, where we have some professional traders where on those here based on a 1 minute, let's say if it was the futures or the Forex, they can take advantage of it, and they can recognize where the breakout is going to be from above that area or below that area. And now you can see there is a projection. Oh, by the way, the system, you don't need to upload and download, because the system updates itself while you are in the trading. So if you notice right now on the Microsoft, we got a projection just fired up at 57.71. So the idea about downloading and uploading your lines every day, this is not in our book, because the market can go high and low, and then you will be running out of. And then the zones are not, let's say, from 57.84 to 57.87 or 88. No, I don't like that. I have 10 ticks in my pocket. Don't tell me the probability from 57.84 to 88 or 89, and this is your zone right there. That is not going to work on my head, because I need to the tick, and that the probability 10 ticks plus minus, that it does not function with my head. Anyway, when you are trading, the system is studying that and is giving you the projection where the probability this market is going to be most likely rejected. And whether you are in Singapore or in Australia or in South America or in USA or in Canada or in Europe, even if you are on a low frequency net or on the net, your net is not, those here, the minute you start your Ninja Trader, is always updating your chart, whether you are using a Renko bar, and it's coming directly with a zero delay from our server, and that is no upload, no download, and then we are measuring everything, and then you are getting the precision where the probability of that market is about to turn around. And as you see right now, I have not looked at the chart on the Microsoft. Jesus, it's been many years, and we can see, I'm going to stay on that video. I don't want to make it long, but we will find out later on if it got projected on the 57.71. Let's look at the stock, and this is a Home Depot. I used to own a lot of Home Depot. I sold them at 36.30 when we had the mini crash. and I sold 10,000 stocks for $36.30, and this is a few years back. And now I'm looking, there is $100 different in the price. And back then I thought I made a good deal because I made $2.30, and I sold when I cashed in. I remember that day. It was 36.30 or 36.35, somewhere around that area. And I thought I made a good trade and got $2.30 on each one. And look at this. That's heartbreaking. Anyway, if you notice, this is the Home Depot pullback. Again, guys, pullback, re-enter. This is the only thing work in this business. Pullback, re-enter. Pullback, re-enter. It didn't do well. An entry, 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 reversal signal, exit, entry, and now an entry. So the system is always trying to direct you on that one. And this is the Apple, and I short out the Apple $400 something when the new phone came out with the Samsung. I knew it was over, and but I didn't stay long because I'm more into the small cap. I'm not gonna freeze back then $400 on one stupid stock. Anyway, this is the Apple reversal right to the tick on that line. Entry, reversal, entry, reversal, entry, exit, entry, entry, reversal. You can see how those, for a guy is a new trader, what he's gonna see is just line. And this is a difference between a guy has been trading for a long time. He can see diamond, and another trader can see piece of glass. And this is exactly what you're looking at. Depends who is looking at that chart. If you are a professional trader, you can respect and understand the accuracy in the system. If you are amateur trader, to you is nothing but the glass and lines and negative. You don't get it, folks. This one here, the system, as I said from the beginning, is we're gonna open for, look at this entry. Beautiful. What is the destination? Right there, 108.11. If a trader don't know where his entry and his destination, boy, you are in a lot of trouble. Anytime you want to enter the market, you have to know your destination. The reason is, I'm not going to ruin my day on $100 stop loss just to get $5 or $10 straight. If I want to invest $100, I'm expecting $300, $400. If I'm taking one ES, I'm gonna use 10 ticks stop loss, 120 ticks, $120. Sorry, guys. If it's not gonna give me $300-400, then I'm not interested in that. I'm not gonna take a trade on the ES, invest in $100, $120, $150 to just get $100. That's not the way it works with the market. The way it works with the market, when you are flipping the coin, and we're gonna flip it 10 times. Every time I lose, I pay you $10, but every time I win, I need $50, and we're gonna flip that coin 10 times. So this takes me 2 winning trade to get my money back. Sadly, a lot of traders, they don't understand the management concept. New traders, I'm not talking about. So when sometimes I'm looking at the trade, and I find out I need to invest more money for that target, then maybe I need to skip it and not be pissed off with that trade, because if it's gonna go to the bad direction. Folks, that's all what we have for today. This system here, if you are a member and you're not a member, this one here is $35 a month, and it's not on the web yet, because when we put it on the web it will be on a total different price, but we are giving that one practically away for $35 a month, whether you are a member or non-members. You can shoot me an email, you tell me you need it, and we will activate your system. And you have another option that you can activate a yearly. Is yearly cost $300. That's mean around, if you pay yearly $300, that's around $25 a month. That's less than 90 cents a day. For the guy is subscribing $35 a month, that is around $1 a day. For $1 a day, if that's mean the price of what, 2 ticks a month, the price of an ES, 2 ticks a month. If this system here can save you one bad trade, that will be covering 3 months subscription. If this system, because it costs 2 ticks a month, so if this system here can save you one bad trade in 3 months, and you can make one trade out of that system in 3 months, that will cover itself. So there is no way anybody can go wrong with that. And there is no time limit. You can cancel anytime. And once you are on that subscription, nobody is going to change the price on you. But once it goes, and this offer is only for August months, once we put it on the web, it will be different price. Also, the system is available on NinjaTrader 8. So you can use NinjaTrader 7 right now, and when NinjaTrader 8 come out, you can just shoot me an email, and I will upgrade your NinjaTrader 8 for that system for free. And it will be available next week, the NinjaTrader 8, and you can have the NinjaTrader 8 directly straight to NinjaTrader 8. But the thing is, if there's any new beta version come out, this is a nightmare. It's been for us, because then we have to upgrade hundreds of people to the newer system. So without any headache, you can order your NinjaTrader 7 on it, and once NinjaTrader 8 released, you just you send me an email and you tell me to upgrade, and it's totally free, no yearly fee, nothing. It's just simple. Shoot me an email, tell me if you want it monthly subscription or yearly subscription. Monthly is $35, and the yearly is $300. What you see, what you get, except the colors on the bars. Those bars colors are in our indicator package. This is not included, but I'm sure every trader has his own bars. But those bars are not included, the colors, but everything, the entry, reversal lines, projection, a major, minor support line, all those, you will have them in your package. Folks, that's all what we have today. God bless you all, and see you all next week. Thank you.